It's Alyssa Corum here, and today on Technical Analysis, we're taking a look at Alibaba, which is one of our stocks to watch this week. Now, Alibaba is no doubt one of the most well-known China internet stocks out there, and it's trying to climb above a buy point. But just because a well-known stock is breaking out, that doesn't necessarily mean you should buy. It's important to carefully consider the chart action first. So let's take a look at this daily chart for Alibaba. Now, shares are clearing a 118.10 buy point from a cup with handle base that began all the way back last June. Now, Alibaba is breaking out in volume that's slightly above average, and you can see the volume bars down here. It's key to see strong volume on a breakout, at least 40 to 50% higher than average. Now, this space is actually very similar to the cup with handle that Apple recently broke out of. Both bases have a depth of 39%. And our research shows that bases with a depth of 40% or more have a higher risk of failing. So this is right on the edge of that. Now, the formation of a handle here is positive because a handle represents a final shakeout of weak shareholders. But even though Alibaba is staging a breakout above the handle, shares are still about 11% below their all-time high. Now, this could potentially signal overhead resistance lies ahead for the stock. As it gets closer to the old highs, more and more investors who bought the stock around that time may want to get out of their positions. And of course, we have to talk about the relative strength line, which is the blue line on the chart here. Not only is the line well below all-time highs that coincide with the stock's all-time price highs, but note that it's also lower now than where it was at the start of this handle, even though it's now trading at a higher price. That signals underperformance versus the S&P 500. Now, a quick note on the fundamentals here for Alibaba. Revenue growth is very strong, but earnings growth has been in the low single digits over the past 3 quarters, and that's expected to continue with estimates for 2019 bottom line growth at 9%. When you're looking for top growth stocks, it's ideal to see earnings growth of 25% or more, and it's even better when you see that growth accelerate. So whether it's Alibaba or Apple, just because a widely followed stock is breaking out doesn't mean it's the best stock to buy. Look at the quality of the technical action and the fundamentals before you start a position. For Investors Business Daily, I'm Alyssa Corum.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube.
If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.